start. It's good to see you all. Thank you so much for joining us, and thank you so much to our audience as well. We as an association are trying to get you access to the latest information regarding our industry. We are very glad to have this day a group of professionals that are involved in creating more home ownership opportunities. As a celebration of Home Ownership Month, we're very glad to present you different down payment assistance for our community in Nashville and Tennessee. And more than anything, we want you to know that the association is trying to engage actively these commendable organizations to provide you with the tools to serve your clients, to serve your referral partners. So today we're very, very grateful and very excited about having this group of professionals here sharing information that will be relevant, that will get us into a different level of connectivity, of service. And without further ado, I would like to let our presenters to introduce themselves and start the presentation. Thank you so much for attending today. Again, we are Nashville Mortgage Bankers, and we're very glad to present you this series of monthly webinars. Thank you. We're starting with housing.
Yes, hello guys, and thank you so much, Miguel, for the introduction. My name is Joanna Faust. I am with the Housing Fund. We are a CDFI, a nonprofit community development financial institution, and we've been open for almost 27 years now, providing down payment assistance and closing costs to the low medium income population. So I am very excited to be here, and again, thank you so much for the opportunity.
Good morning. Oh, okay. Okay. I'm Sharon Bosworth. I'm with Affordable Housing Resources, and that's kind of a oxymoron right now, affordable housing. We've been in business for about 33 years here in Nashville, and we're a nonprofit and also CDFI.
Thank you so much, Ms. Toomey.
Thanks, Miguel. Good morning, everyone. I'm Toomey Parrott. I'm with THDA, Tennessee Housing Development Agency. We are the state's housing finance agency. We just celebrated our 50th year anniversary last year. Yeah, so I'm excited, right? Because right now it is a tough market. So we will offer solutions. So I'm excited to hear and to talk about our program today.
Thank you so much.
Oh, sorry. I'm Veronica Candlewall with Down Payment Resource. We are a for-profit, but we provide tools to help everyone be able to find down payment assistance programs across the nation. Whether you're a consumer, loan officer, lender, we provide plethora of tools, and we just want to make sure that everyone is aware of the programs that are available out there before someone purchases a home and it's too late to utilize those programs.
Thank you so much, Veronica. Great information as well. Well, we're going to let you start with the different presentations, and let's go ahead with the Housing Fund. That is our first presenter of the day. Joanna, take it away, please.
Awesome. Thank you, guys. As mentioned, we are the Housing Fund, and today I'm going to be talking about our down payment assistance and closing costs, as well as our shared equity program. Next slide, please. All right. So in order for our clients to take advantage of the services that we provide to the low medium income population, our clients do have to take home buyer education programs just to make sure they understand what it takes to be a homeowner, right? And also helping them understand what's a savings account, why it's so important to have an emergency fund, and also understand the credit. What's a good credit score? What's a bad credit score? So ways that we can just educate our clients after they have purchased their first home. Next slide, please. All right, so I'm going to start first with our down payment assistance and closing costs. And if you guys ever have any questions, feel free to reach out to me. But for our down payment assistance, our senior mortgage advisor, Ms. Frida Harris, is the one that oversees the down payment assistance and closing costs. Next slide, please. All right, so the Housing Fund provides loans from $5,000 to $35,000. Again, all our services since we are a CDFI, Community Development Financial Institution, we can serve from $5,000 to $35,000. And right now we have a promotion for 5% interest rates for 5 to 35. And these loans can be repaid over the course of 10 to 15 years. Next slide. All right, so for any loans that are above $10,000, the minimum credit score has to be 600. And then for loans over $10,000, the credit score has to be 600, and any loans above $10,000, the credit score has to be 620. And 45% debt to income, as well as not having any collections, no charges within the last 12 months. And they also have to not have any delinquencies. And also they have to be in their job for at least 120 days. Also, our down payment assistance, it is for the entire state of Tennessee. So we cover the entire state of Tennessee for down payment assistance. Next slide, please. Okay, so income qualifications, I'm super excited that we can go up to 100% in area median income. So for one person, and we base this on household. So one person, it is 80%, 59,000, 100%, 74,000, and 120%, $89,000. So it is not crazy to me that now what is considered affordable is a person that makes almost $90,000. It just tells you how expensive the housing market is in Tennessee, which I'm so excited again that we are able to provide our clients with some type of assistance. And as you can see there, again, just want to make sure everybody understands that in order for our clients to take advantage of the services, they do have to complete the home buyer education program. Next slide. All right, so how to get started? So a lot of times customers come to us directly like, hey, I'm ready to apply for down payment assistance, but no, we actually have to talk to the mortgage loan officer first. So in order for us to take an application, the client already has to have a contract with the first mortgage banker. Once we have that, the MLO sends the contract to us in the submission package to the housing fund, and the submission packet can be found in our website, and we're gonna process that from 5 to 7 business days. Once we are approved, we're going to be receiving, we're gonna be sending the loan estimate to see how much the client is gonna be qualifying for. After everything looks good, then we're going to be working with the title company so they can start working with the loan estimate, the notes, the payment letters, things like that. And then we're gonna be creating the closing disclosures with the title company. Once everything looks good, we're gonna send everything back to the title company so they can acknowledge that everything is good, everything is ready to go. We're gonna give the title company 3 days for them to acknowledge that. After they have acknowledged that, then it's time for us to close. So we're gonna be closing together with the first mortgage loan with the client. Next slide, please. All right, so now this is one of my favorite services that we provide is our shared equity. And for shared equity, we have Ms. Candice Winburn. She's been with the Housing Fund for 13 years, and she is the Senior Mortgage Advisor for our shared equity program. Next slide. So what is shared equity? So with this program, this is not a loan, it is an investment that we're going to be doing to the low medium income applicant. Again, the client has to already have a contract with the bank, and we're gonna be able to invest in the client 74% of the loan. So the client has to come out with 1%. We're gonna provide 25%, and then the client has to get a loan with the first bank for 74%. So just for easy math, let's say that you see a house that costs $100,000. So we're gonna be able to invest 25%. The client will have to come out with 1%, and the loan will be for 74%. So in this case, $74,000. That means that the client doesn't have to pay mortgage insurance. It's gonna stay affordable for that client. This is not a loan. This is an investment that we're going to provide to the client. Next slide. And how do you qualify as well? The client has to be low medium income, and we can base this up to 120% AMI, 40%, 45% debt to income. This is only also for first-time home buyers, not having any delinquencies, and being in the job for at least 120 days. Next slide. All right, so again, we're gonna base it up to 120% AMI, so 89,000, 74,000, and 59,000. And like our down payment assistance, they have to complete the home buyer education as well. Next slide. Okay, so for shared equity program, we have 2 ways a client can apply. So we have the buy initiative, and with buy initiatives right now, we have a freeze, so we can only work with buy initiative with First Bank. So if you have a client that is ready to buy a home and they're interested in shared equity, they can only go through First Bank, and the maximum sales price as of right now is $300,000. Now, if the client does not want to work with First Bank, they can go to our website, and we have a portfolio of 12 houses that are ready to be moved in. And with our Housing Fund Initiative, we work with First Bank, Citizens, and Pinnacle Bank. So again, by initiative, we can work with First Bank up to $300,000, or the Housing Fund Initiative with First Bank, Citizens, and Pinnacle Bank. Now, one of the questions we get is, what happens if I want to sell my home? Well, if you stay in the home for 5 years, for example, and then you decide to move out, we're going to split the appreciation, not the equity, but the appreciation of the home. So the house originally cost $100,000, but let's say it's been 5 years, and now the house is appraised for $150,000. We're going to split the appreciation 50-50. So the client is going to keep $25,000, and we're going to keep $25,000, so 50-50. We're not going to be touching the equity. It's just appreciation. So now that client has maybe enough money to come out with a down payment after that. Next slide, please. Again, the closing with our shared equity is the same as our down payment assistance. We can work 7 to 10 business days from the time we receive the application. Next slide. Thank you. That's it. Does anybody have any questions?
Joanna's going to have to hop off a little early, so if you have any questions and you want to put them in the chat, we can take those now, and then we'll do the rest of the questions at the end. So we'll just give it a quick minute in case anybody has a question, and then we'll get started with Sharon. Look like anything is coming through. So thank you, Joanna, and we'll go ahead and let Sharon get started.
Okay. I did not do slides. I thought we were going to have 10 minutes, so I didn't do that. So I can send, if anyone wants any information in PowerPoint, using any kind of information on these products that I'm going to talk about, feel free to shoot me an email. I'll be glad to send them to you. The first product I want to talk about is called our Tennessee Down Payment Assistance Program, and it is with local banks. And the banks invest in affordable housing resources. And how that works is they give us, give you an example, they give us $1 million, and we issue funds back to their customers, the down payment assistance. For $15,000, well, it can be 10, 15, or $20,000. And so if the bank has a customer and they see that they need the assistance, they'll contact us, and we do all of our disclosures. We do the loan estimate, we do the closing disclosure, we do all the disclosures and single closing, and we send the down payment assistance income is wire through the closing.
Hey, Sharon, I'm sorry to interrupt you. I think the sound is still a little muffled. We've got a couple people in the chat saying they can't hear you very well.
I think like. Okay, is this better?
That is better. Thank you.
Okay. All right, I'll try to get closer to the computer, see if that works. Okay, so that's the Tennessee Down Payment Assistance Program. And that all of our products are 80% AMI. So you can only have an income of 85.5 for this Tennessee Down Payment Program. What we do is we use the family of four. And even if there's only one person on the loan application, we can still use that 85.5 as their income limit. So we go with this program, we go by the person that's on the application only. And then we close that, we send all the documents to the closing attorney and close those loans. And we have that program with about 5 lenders right now. So if someone calls here and wants that down payment program, we refer them back to one of the 5 lenders that we have that program with. We also have a down payment assistance program that is interest bearing, and the rate on that right now is 6%. And we try to limit that to where the payment is not over $100 to $150 a month to make it affordable. Then we do a 10 or 15-year term on that. Then we have 2 products with the loan, with the houses that we build here at AAPI. And one of those is a CDFI program where you can get $20,000 down payment. And it is a due on sale. So there's no payment, no monthly payment, no interest. Just when you sell the house, then you pay us back the $20,000. And that can be subordinated if you decide to refinance with the rate program, you can subordinate that credit. We also have a shared equity program, but that's only with the houses that we build. And that can be up to $150,000. So if the house appraises for $400,000 and you are only can qualify for $300,000 loan, then we can give you $100,000 or even up to $150,000 as a down payment, so that you can afford the payment and have that payment. That is also a due on sale loan, and so you don't pay that one back until you sell the house. You no longer own it. And right now we have one house that is in the middle of selling that we're looking for someone to purchase that home. We have 5 under construction that will be completed this year. And then coming up in the next year, we'll have about 45 properties that we'll have to sell. That these 2 products that I told you about in the end will be available for you to use to make them more affordable. And those are mostly the 4 products that we have for down payment. But like I said, they're all 80% AMI. So you don't do anything over that. We try to keep everything affordable. We also require that they have homebuyer education on all of our products too. And we do that homebuyer education here. We can do online or in person. And that's our product. Are there any questions?
We did get a question in the chat from Teresa, and she said, I, as a lender, cannot use these programs, correct?
You can use the second one I told you about, the interest bearing one, or as a lender, you could sign up with us to do the first one I talked about, the 22 down payment program. You could do those two as lenders. The last two you would have to do as, and I mean, we don't care who they do, but the first mortgage will, but you could do the second with us if you went to another lender to do your first mortgage.
Thank you, Sharon. I don't think we've got any other questions yet, but we will certainly take some more at the end. Trudy did ask if contact info will be shared. We can certainly share those. And Teresa said, thank you so much. Are these programs all on your website?
Yes, definitely.
Okay, thank you. Okay, and next we'll move to Toomey with THDA.
Thanks, Caitlin. Okay, so I feel like all of our partners, right, realtors, lenders, they know THDA, or they should know THDA. We've been around for a long time. Our program has changed. We've had to pivot, right, along with the market. But I feel like for the most part, our partners know THDA. Next slide, please. So what I want to focus on is our buyers, because, you know, rates are high, inventory is low, sale prices are high. So I feel like a lot of them, they're not even looking, or if they were, they stepped outside of looking, you know, they're taking a pause. So I think they don't know what they don't know. You know, when they're looking on Zillow for their dream house, when they scroll down to the financing part, it's telling them that they need 20% down. You know, at today's sale price, 20% down of what's the median in Nashville? 500,000. That's bonkers, right? So they're not even trying to be in the market. So I say it's going you know, towards the buyer and educating them how to work with THDA, you know, what are the steps? And of course, I didn't spell it all out, because if they partner with our approved lenders, y'all are the professionals, right? You would guide them, working with a real estate, you know, professional, and getting that advice and guidance from them. Of course, we require the home buyer education part, and then through the lender, the realtor, your guidance, you would lead them through a house closing. But ultimately, you know, $15,000 is what we can help buyers with. Next slide. Yeah, and just the options, you know, what does it look like, right? So $15,000, we have the first option, $6,000. It's deferred payments. It is a second lien, 30-year silent seconds. The other option, if they need more money, it's 5% the sale price, capped at $15,000. And the other option that's maybe not as many of our partners know about is the rate. When our rate is competitive, like it was last year when it was 2% under market, we're not quite, you know, 2% right now under market, but it is competitive. So if they don't need the down payment, if they just want us for the rate, that is an option. So just presenting these options, and again, that $15,000, I wish I just did that a little bit bigger, right? So $15,000 is what they can get from THDA. Next slide. Okay, so for our partners, this is what it looks like, because again, we've had to pivot. It has been, you know, different reincarnations. It was 6,000. It was capped at 7,500, but this is what it is currently. You know, these three options that I just covered, this is the first part. The next part, part two, is on the next slide. And, you know, where would the buyer fit best, right? Because if you've done THDA forever, you're very familiar with our Great Choice program. That is our government program. It's for FHA, VA, USDA, and they do have to be a first-time home buyer. We have our, you know, credit overlays. You know, the minimum credit score, 640, max DTI, 45%, right? We do finance these programs with tax-free bond money, so we do have to collect documents. But I feel like not every one of our lenders know that we offer a conventional program. It's Freddie Max HFA Advantage. where they don't have to be a first-time home buyer, right? That's big. And pretty much we've taken our overlays out because we do sell these to Freddie. It's a mortgage-backed security program. So it looks different. The income, we're not looking at the household number. It doesn't matter on the conventional side, whether it's a 1 to 2 person household or 3 and over, we're automatically looking at the higher tier. So if you've gotten THDA's memo recently, our income cap, if you're on the government side, it's almost $150,000. And then if you're going the conventional side, one borrower living in the home by themselves, they can make almost $150,000. But yes, the challenge remains that our sale price hasn't moved. It is still capped at $400,000 across the state, right? And then the third part, ultimately, if you're going, which is on the next slide, if you're going with THDA, it's our rate, can't, be bought down, it's paired with a first mortgage. It's paired with a first mortgage. It's either the Great Choice or the HFA Advantage. And of course, our sale price limit, that's the same. The home, it does have to be owner occupied. And yes, that home buyer education piece of it, that's a non-negotiable. But going with THDA, we are the investor, we're the servicer. Your buyers, they would make their mortgage payment to our servicing unit. So I feel like it's very simple because I talk about it nonstop. But the next slide has my contact information. If you want to, be able to discuss this confidently with your buyers, definitely reach out, one-on-one, or if you want me to stop by and talk to your team, I'm totally for that. But it should definitely be an option. And we're all here talking about down payment assistance, and I don't want it to be, of course, a competition because ours, it's stackable. Of course, we have to be first, lien, second lien, and then if it's HUD approved, then, they're okay with being third lien position, we're fine because we want to give the buyers the best deal, right? Just real quick, I was talking to a realtor and he helped his daughter buy a home. And she was able to apply $42,000 on her first home purchase. It was a builder credit. It was our program. And then it was another program. So 3 different programs. And she gotten $42,000 towards her home purchase. So we're not in competition. We want to be able to give you the resources so that you can give your buyers the best deal. So thank you for having me on. Oh, I think there was a chat.
Yes, there is a question in the chat. THDA's income exceeds Home Ready and Home Possible on the conventional program. Is that correct?
It does. So when we first rolled it out, we were capped. We limited to 80% AMI. It's a Freddie program, right? So I believe that's Home Possible. Okay. Yeah, Tiffany's like, give them all the answers. So conventional side, Home Possible, it's our HFA Advantage. We did limit it initially when we first rolled out the program. It was limited to 80% AMI, but we took that away. So it is at our 3+ income limit. Okay, so 3+ income limits, and we're not, tied to how many people's in the home for the conventional side. So it's automatically at the higher tier, right? And then Tiffany's asking about the Heroes program. That is on our government side, our Great Choice. It's homeownership for heroes and rates for our heroes, for military borrowers, for EMTs, for firefighters, for police officers, it's always half a point less. It's always discounted. So yes, they do get a discounted rate. And I believe currently, I checked last week, their rate should be 6%. Any other questions? Or we can save it towards the end.
Thank you so much. Tumi, appreciate you. And we will move to our last speaker.
Thank you. If you actually will start, I think, on the next slide. Perfect. So, hi guys, thank you for having me today. We appreciate being part of the dialogue. Just a little bit more about Down Payment Resource. We were founded 16 years ago to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer programs at that time, so we developed it. And we created an easier way to connect eligible borrowers with hard to find resources like bond programs, DPAs, grants, mortgage credit certificates, and other assistance. We provide tools and down payment assistant program information for real estate agents, loan officers, and ultimately consumers to help all of you find and understand the down payment solutions out there for your buyers. Our vision, as you can see, is that anyone aspiring to home ownership will know that DPA exists and how to find it. Next slide. More than that, we are led by passionate DPA experts. We've created the only national database and matching engine of all 2,400 plus homeownership programs in the US. Essentially, the system of record for all housing stakeholders. So all programs are monitored monthly and ongoing for current and accurate guidelines. And as you can see here, we sit at the nexus of all the major players in housing, up to and including the GSEs, PropTechs, FinTech vendors, and even researchers and policymakers with whom we leverage our unique data set to create actionable insights and intel to help move the needle on homeownership. Next slide. So last year we worked with the Urban Institute to analyze the 2022 HMDA data. This table shows the number and percent of 2022 closed owner-occupied purchase mortgages that were potentially eligible for down payment assistance. This represents only the 10 largest metropolitan statistical areas, MSAs, in the country. So imagine these numbers nationwide. Overall, those top 10 markets, 43.6% of borrowers who closed on a mortgage in 2022 were eligible for DPA, but that rate skyrockets to 79.8% of closed borrowers who used FHA loans. And it's even higher for USDA loans. Next, please. So the question becomes, is there an awareness gap among consumers, loan officers, even real estate agents, all of the above? Nearly 80% of FHA borrowers are eligible for DPA, but according to FHA's annual report to Congress in 2023, only 15% of them are utilizing government DPA programs. That doesn't include gifts from family, bank of mom and dad, etc. And FHA borrowers are typically eligible for more programs than conventional borrowers. And if such a gap exists, what can we do to combat that? Next, please. Now, while we looked at closed loan data earlier, let's also look at DPA utilization from another perspective. Last year, partnered with Urban Institute to perform a decline loan analysis in those same top 10 MSAs using 2022 HMDA data. That analysis found that 30.7% of declined loans were potentially salvageable with a DPA. That meant they were declined for clear to close or cash to close, sorry, or DTI, which a DPA can help address, and were also eligible for down payment assistance. Furthermore, that percentage has increased in 4 of the last 5 years. So this is an awareness and utilization issue we can solve for. Next, please. Consumers are learning about these programs now in ways they couldn't before, and the appetite is there. Zillow has been transparent about that, and as you can see from this headline. Next slide, please. So we're reaching millions of consumers every year who are in the early stages of their homeownership journey and looking for properties online. We partner with the major real estate search sites like Zillow, Realtor.com, and Redfin to provide DPA information to consumers looking for homes on their sites. And we partner with MLSs to educate agents and their home buying clients about these opportunities. Do you know what the #1 question we get from real estate agents is? How do I find a loan officer that can help you with DPA? Next slide, please. We know that lenders struggle to keep track of all the programs and requirements as they evolve over time. So we built our DPA directory, the command center, if you will, to provide comprehensive insight into all programs for product development teams to find, review, approve, onboard, and monitor. Our loan officer portal enables their LOs to see not only the approved programs offered and data about them, but also logistics, next steps, and even the company's own overlays. Our underwriter portal gives underwriters complete access to all data about a program so they can make an informed decision. Our consumer portal allows loan officers to engage and educate consumers about their approved programs that are available and can help those consumers take the next step. All of this is designed to provide lenders with a robust, comprehensive platform that encourages and enables more participation in your programs. In addition, we've also built CRM and LOS integrations. Excuse me. For example, we've just launched an Encompass integration to bring all that functionality to life right in the loan file in the lender's LOS system. We have alerts that populate when programs are available, and underwriters can import conditions directly from DPR to expedite DPA underwriting. When we think about raising awareness and utilization among loan officers, for example, addressing the decline loan issue and how to innovate to do so, this is how DPR is innovating on your behalf. We would love your feedback. Next screen. And this is how you can contact us. info@downpaymentresource.com, downpaymentresource.com/lenders and /reports. Thank you.
Thank you, everyone. That was amazing information. We do know and realize that probably one of the #1 barriers that first-time home buyers have is that gap, that down payment assistance. So you guys gave some great information on ways that you all can offer, lenders and borrowers access to homeownership through some of your programs. The down payment assistance resource is a great resource. You can get address information, plug those in, and it'll pop up locally what options are available for your borrower. So that's amazing. And then, THDA is such a good partner for so many of us with the loan programs that they offer. And then Sharon, what you guys are doing in the development space at Affordable Housing Resources is amazing. And then the Housing Fund, thank you guys so much. I think Joanna had to hop off, but that $35,000 assistance and loan that you can get there with 120% income is a great option as well. So thank you all for presenting today and giving us more information. I just want to let everybody know that we are recording these webinars. They will be on and available on our website if you want to go back and look at them. But please reach out to all of these great presenters, these great companies to get more information, and let's close some more deals and get some more people in houses. If there's any other questions, we will give you guys your day back.
Thank you.
All right, thank you.